Hey everyone, welcome back to the channel. Today I want to give you a market update. My last video was more than 2 years ago when I was warning that we were entering the last phase of this bull run. Basically a wave 5 blow off top where we're seeing all of the makings of a super bubble. And what was going to happen next was going to be a correction. Now my timing wasn't quite right. The market went on quite a bit longer than I had anticipated. But the behavior that I had kind of forecasted and pointed to did play out. We were seeing really rampant speculation, and there was a bubble of all bubbles. Basically, everything in the markets, including luxury watches and cars, condos, items that you don't normally see as appreciating assets, or things that should be speculative, became speculative. On top of that, we saw SPACs and all kinds of crazy behavior, and the market was greedy. I mean, the market was accepting it. People were looking for ways to speculate and leverage. And of course, since then, we've seen the bubble pop. And it's been about a year and a half, a little bit over a year since the market popped. And we're now seeing some new bullish behavior. But I wanted to go over the charts and show you what I'm seeing, because I do think right now is a little bit of a critical time. Now, the market's not totally clear, but I would like to share my reading of them right now and what I'm preparing and expecting for. I still do think that we're in a larger bear cycle, and the most recent bullish behavior that we've been seeing is more of a retracement than it is confirmation of a new bull, at least for now. And I'll show you where that would change from bearish to bullish. So let's go ahead and take a look at the charts, and I'll show you what I'm looking at. Okay, so this is the S&P 500, SPX. And my last reading of this chart showed kind of the larger cycle that I thought we were in. And I will point that out one more time so you can all see. So when I look at this chart using Elliott Wave, I see a couple distinctive areas. Those two distinctive areas are here. This correction here, the sideways correction with, big sideways behavior and big dips. This would be the 2008 and 2010 market tops and subsequent crashes. And I also see this structure here, which is, let me see if I can get this to play nicely. It's always hard to get things lined up perfectly on the chart. I see this mega structure here. And this is what I consider a wave 4 triangle. So I'm going to label this using Elliott Wave. And there are kind of two possibilities here, but this is the current count that I'm going for. So this is wave 1, this would be wave 2, and this would be wave 3, this would be wave 4, and this would be wave 5. So just quickly, Elliott Wave theory says that in any market, you can see kind of recurring wave patterns. And in the main direction of trend in the market, you will see a 5-wave structure, which is called an impulse. So the 5-wave structure has 5 parts to it. First part is wave 1. Wave 2 is the first major correction. This is typically your deepest correction. So if we do a retracement here, you'll see that this is a very deep correction down to the 0.618, almost exactly, and also to the 0.5. And this is very typical. A wave 2 correction is typically an ABC, and I do see that here as well, although it's not like a zigzag. I do see the classic ABC structure where you have a down impulse, a correction. You can see this is looking pretty too wavy. There's an impulse, there's a little bit of sideways action and another impulse, and then a 5-wave completion here. So you can call that ABC. And then we have wave 3, which is by far the most robust part of the impulse, and that yields the majority of the gains. And then we see a very typical wave 4 structure, and a wave 4 triangle can play out like this kind of megaphone pattern here, and it's labeled A, B, C, D, E. And then we have the blow off top or end of the impulse, which would be wave 5. So both of these corrections are really textbook. And you can see how good the geometry really is. It's really fairly precise even at these larger time frames. So in my opinion, it's pretty unmistakable where we are right now in the count. There is one alternative, and I will paint that really quickly since we're on this larger time scale so you can see it. And that would be, instead of this being 1, 2, 3, 4, 5, it's possible that this is simply 1, 2, and this would be 3, and we're going to do another 4 and 5. And that would mean that this structure here is actually an intermediate wave 3. Each of these impulses, this impulse has 3 impulse waves up and 2 corrective waves. In each of these impulses, it subdivides into additional impulses. So it is possible that what we have seen is just wave 1, wave 2, intermediate wave 3, and we're still looking for a wave 4 and then a wave 5. I'm not going to rule that out, but I do think that we should see still a pretty big wave 4 correction here regardless. So we'll chart it out, and I'll show you what I'm expecting to see. Let's put a retracement here just so we can kind of draw out what we're expecting. So let me delete this for now. And let's zoom into what we've seen in the last year and a half, actually. Go down to the daily chart. So we finished this wave 4 triangle, and what came out of it is an impulse. You could say that this is probably subdividing into wave 1, wave 2, wave 3, wave 4, and wave 5 to complete. And now we're correcting from that. And the key to my analysis right now is really this initial part of the corrected structure. If I draw this out, you're going to see that it creates this falling wedge pattern, which is actually what I would consider a leading diagonal. And a leading diagonal has, it is an impulse, but it has overlapping waves. So if I draw this out as, if I label this, wave 1, 2, 3, 4, 5, you'll see that waves 1 and 4 overlap, and typically we wouldn't see that. You would have a wave structure where wave 4 does not overlap wave 1. And this is very crucial because while this type of wave structure can appear more often in complex corrections or normal impulses, the leading diagonal, where the wave 1 and wave 4 overlap, is only ever seen in the beginning of a larger structure or the termination of a larger structure. So it's clear that this is a component of a larger corrective structure that has not completed yet, because we really have just the first leg of this corrective structure, and we have the rest of the structure to go. So while this structure here can be componentized, and you see it in other patterns, and there's not really a clear indication of where you are in that larger structure. It could be kind of anywhere in that structure. This leading diagonal, by its name, basically says that it is only the beginning of the correction, and the structure of this is actually A, B, C for each of these waves here. And you can see it very clearly. You see this 3-wave structure very clearly. Let me finish labeling this. So in my opinion, it's pretty unmistakable what we're seeing. And since we've made this low here, we have come back up and retraced a bit of the correction, but we're not breaking this top here at all. And in fact, if you look at it based on Fibonacci, we've come back to the 0.5, which is very typical for a corrective structure where this correction is not complete and we're expecting another leg down. The typical retracement would be 0.5 to 0.618. That would be quite typical. And so the structure that I am seeing playing out, that I think that we will see still, nothing on the chart has contradicted that is an ABC. So this would just be a zigzag correction. This is one of the deeper corrections. Let me see if I can get this where I want it. Okay, that's close enough. Let's say here and here. And I will show the wave so you can see it. I'm going to change the color. And let me zoom out so I can get this measurement correct. And let me do a measurement as well. Put this on log. Based on the current geometry, we can forecast what this might look like using channel as well. Okay, so back to the bigger picture. I believe that we have completed some type of 5-wave move here. This is this count being this triangle here anchoring wave 4 correction. And now we are correcting that larger structure. Typically, we would see on a retracement of this size at least the 382 level. So we have not hit that yet. And if this is in fact the end of wave 5, we're actually expecting a correction down to 0.5 or 0.618 level. So that is also definitely in play. The reason why the most recent price action does not look that bullish is because we're still in this major retracement. We've come down and now we're tracing and we're just getting stopped at the 0.5. And this right here is a perfect ABC correction as well, which is what you would expect in a wave B. So I pull this up, look at this channel. You can see that we didn't break this channel at all. In fact, we're pretty weak. We only made it to the middle of the channel before breaking down. And now we're retesting this channel from the bottom. So until this price action here breaks this top, the pattern that we're looking at right now is still pretty convincing. And I still do believe that the next step is down further. Just a note on these channels, when we're looking at an impulse, we expect Elliott Wave to look like this. You start at wave 1, you come back for wave 2. Wave 3 should break the channel, and then you see wave 4 at the top of the channel, and then wave 5. What we're seeing right now is more indicative of a correction. Corrections are much weaker, and they tend to stay inside of the channel. So a typical correction would look something like this, where the dominant trend is actually down, and we have a, let me draw this really quick. So the trend is down, and we see a counter direction rally, right? A retracement basically. Typically to the 0.5 or 0.618 level. And what distinguishes a correction from an impulse here is you can see that in impulse, wave 3 breaks the top of the channel. As you can see here, right now, we have not broken this channel at all. If this were to be a counter rally retracement, this would be something like A, B, C, and you can see that this didn't even get to the top of the channel or the 618. We already rolled down out of this channel. So that's pretty indicative of a correction. If this were bullish, we will need to see price actually break above the channel. Right now, it's still below the channel. So, you know, despite the recent bullishness, despite the banking crisis looking like it's getting better, despite different commentators saying that inflation is going away, market is getting better, and we're not really seeing the market crash or anything like that, I still believe that there's a lot of pain ahead of us. And I think all we've seen right now is counter rally. This is true on just about every major chart. If we look at crypto really quickly, you'll see the same thing. It is a different structure slightly, but you'll see we're always doing major retracements, right? So this is a big down leg. There's more going on here I won't get into, at least in this video, but you can see we've come back up, but this retracement is only at the 0.236 level. So this is still pretty small of a retracement, and definitely not enough to confirm a bull market yet. In Ethereum, we see very much the same thing. We've come down quite a bit, and we're doing some retracement. Please ignore the rest of the lines that I have here. These are just some working charts. But you can see, we haven't retraced the majority of the price action that we've seen to the downside. On NASDAQ, you can see the same thing. We came down here. We're only just breaking the 382 level. NASDAQ does look a little bit different. You can see if we draw this channel, we are breaking this channel. So it does look quite a bit more bullish. But it's still a major retracement of this down leg, and we haven't broken structure or anything like that. So chances are we're still correcting. Dow Jones Industrial Average looks similar, although more bullish for sure. We broke up to the 618, but we haven't broken further than that yet. This structure does look a little bit more bullish, and it's possible that we get a different corrective structure than we've seen in the S&P. This could indicate that we would go higher, and maybe we do some type of complex correction. But again, nothing in these charts show that the markets have reversed trend quite yet. And in fact, if we look at the S&P a little bit closer, we're actually seeing the start of this downtrend. So the first area where we might see some warning that the market has turned is if we actually break this pivot here. So this would be the wave 1 down, and this is wave 2. So I'm considering this. Let me clean up the chart a little bit. I'm considering this the start of the down leg already. This would be our wave 1. And right now we did a wave 2 retracement of that wave 1. And it's quite a deep one. So you can see we got to the 786, which I have to say is not typical. Normally we want to see the 618. But if we look at the structure more closely, we can see that the rules are not really violated. And in fact, we have kind of a leading diagonal structure as well, which is kind of indicating that this is just the start of this wave down. So let me draw this out for you so you can see it as well. All right, that is also a leading diagonal. So that is showing that this is just the beginning of a larger correction. And if we do parallel channel here, I'm doing this in real time, I think we'll find that we didn't break the channel yet either. Right. So this is very possible to be the top of ABC into subwave 2. Again, nothing has broken this geometry yet. The first sign of this, forecast being wrong is if we break this channel to the upside and we break this pivot. That would mean that we're seeing something else going on here. But right now, everything still looks pretty bearish, although we've had the expected and typical retracement so far. So let me clean up these charts a little bit and just show you what I'm seeing on the longer time scale. Okay, so let's talk about where this correction might end and what we're looking for. So again, we're looking for a corrective structure here, which means that we would not break out of this channel typically. So we're still waiting for this counter trend correction to complete. but I do think it has completed, but we have to wait for this to roll down to know. So this would be the counter trend retracement. And if that were the case, then we would use the top of that retracement as structure for this parallel channel coming down. So what we would want to see is this corrective structure play out, something like this, where we don't break out of this channel and we don't break back into this channel. And we would look for a retracement. Minimally, I would expect to the 0.382 of this prior retracement. Okay, if this is a wave 3 retracement and this is a wave 4, that's what I would expect to see, at least 382. However, if this is really a larger correction, let me go out to the monthly scale. I would expect to see something very dramatic, actually, which would be a full retracement of this structure, actually to the 0.5 or 0.618 level. So that means we would see SPY all the way down to 2,400 level, or the looks like 1,800, 1,900 level. So that's quite a bit a ways. Again, minimally, I would expect to see 3,200. Let me draw that out here. 3,200. And if we are in that larger correction, I would expect to see 2,500 level or the 1,900 level. So as you can see, there's still a lot to go with this correction if it is to play out. Now, yeah, I don't think there's too much else to discuss here. This is just purely what I'm seeing based on the charts. Other things that are on my mind are that this type of market correction is unlikely to happen in a vacuum, meaning, this type of correction is typically accompanied by some type of black swan event or some type of global, global issue or news that arises. The things that are most unsettling in the world right now have to do with, of course, global financial collapse or something similar to that, and also the war in the Ukraine. So, I hope that, what we see is purely financial, but I can't shake the thought that this large of a correction, this deep of a correction, may be accompanied by some black swan events that might be, era defining. So, I would say, be defensive here, stay safe. We can never prepare for something like that. And we shouldn't, live our lives in fear, but, we should know that it is a potential possibility. And we should do our best to prepare as we can. So anyways, I don't want to get into politics. I really just want to stick to what I'm seeing from a technical perspective. And this is what I'm seeing. I'm seeing either a wave 4 correction of this intermediate wave 3, which would bring us to the 3,200 level, or what we're seeing is a wave, the end of wave 5 and a larger wave 1-2 correction. On a brighter note, right? Let's say we get this correction, then this would make a wave 1, and this would be wave 2, and then we would come out of here with a wave 3, 4, 5, right? These are not to scale. Wave 3 would be quite a bit larger to wave 1. So this would end, the corrective cycle. This would end the correction, the major correction of the cycle that we've had since, we can call it here since, the late 1990s. And we would, come down quite a bit, but then we would have a multi-decade long bull run after that. So, there's always wave cycles inside wave cycles. And, the best could be yet to come, but we need to make it through this correction first before we see that. All right, that's it for the market update. I hope you all enjoyed. If you have any questions, please leave them down below in the comment section. And if you like what you saw, please consider subscribing. That really helps out the channel and lets me know that you're enjoying this type of content. Thank you guys, and take care.